All right, let's dive right in. We're talking about Palantir today, probably one of the most polarizing stocks on the market. You've got this story of just phenomenal growth on one side, and on the other, a valuation that has a lot of people, well, pretty nervous. We're going to break down both sides of this argument so you can see what's really going on with this stock.
So first off, where does that name even come from? Palantir is named after the seeing stones from The Lord of the Rings, and it's actually a pretty perfect metaphor. In the books, these stones gave you the power to see across huge distances, turning scattered bits of info into critical, actionable intelligence. And that's exactly what the company aims to do with modern data.
So, how do we get our heads around this company? At its core, Palantir builds incredibly powerful software. It helps massive organizations, we're talking governments, huge corporations, find that one crucial signal in a sea of data noise. To really get it, we're going to tackle this like a debate, looking at the hard data for both the bulls who see unstoppable growth and the bears who are worried about that price tag.
Okay, here's our game plan. First up, we'll dive into the bull case, this incredible story of explosive growth. Then, we're going to flip the coin and look at the bear case, the side that's flashing warning signs about a dangerous price. We'll see how this whole thing splits Wall Street right down the middle, and then we'll bring it all together to ask the one question every investor has to face.
Right, let's get into the bull case. And really, this side of the story is all about the numbers. And believe me, these numbers are staggering. This isn't just hype. It's a look at the fundamentals of a true next-gen technology company that is absolutely firing on all cylinders.
Let's start with the big one, the top line. In its last quarter, Palantir pulled in over $1.4 billion in revenue. That's a massive number. And what's more, it blew past Wall Street's forecasts. This tells you they aren't just meeting expectations, they're consistently crushing them.
And here's the speed we're talking about. A 70% increase in revenue from the same quarter last year. I mean, think about that. In the world of big-time enterprise software, that kind of acceleration it's almost unheard of. This right here is the foundation of the whole bull argument.
And this is absolutely crucial. This isn't just growth for growth's sake. Palantir is profitable. For a tech company expanding this fast, that is a huge, huge deal. Delivering 25 cents per share, again, beating the forecasts, proves this is a healthy, scalable business model that actually works.
Now, take a look at this slide. What really jumps out is that last line. Total contract value, up an incredible 138%. Why does that matter so much? Because that number is basically a window into the future. It's the value of contracts they've already signed, which means the wild revenue growth we're seeing right now has a powerful pipeline fueling it for tomorrow.
And here's where that growth is really coming from. For years, everybody thought of Palantir as just a government contractor, a defense product. But that story's changing, and it's changing fast. Their U.S. commercial revenue is exploding. It more than doubled last year, and they're guiding for it to do it again. This is the proof that they are breaking into the private sector in a huge way.
This chart right here, it visualizes the entire bull case perfectly. You can just follow the money. See that massive revenue bar at the top? It flows all the way through the business, covers every single cost, and still leaves a really strong, healthy operating profit at the very bottom. From a pure business standpoint, that picture is tough to argue with.
But that's only half the story. It really is. Because while the company's fundamentals look absolutely incredible, the stock itself is telling a very, very different story. And that's where the bear case comes in.
And this is the great contradiction, the puzzle of Palantir. The business is firing on all cylinders, no question. But the stock chart? It's flashing some major warning signs. The technical consensus isn't just a little negative, it's a clear, unanimous, strong sell. I mean, this dashboard really says it all. Look at the moving averages. Those are indicators that track the stock's price trend. Across 12 of them, 0 buy signals. And it's the same story with other technical indicators that measure things like momentum. The charts are basically shouting that the stock price is headed down.
So why? Why this huge disconnect? A big piece of the puzzle is this number, a price-to-earnings ratio of over 220. To put that in perspective, that is an enormous premium to pay for a company's earnings. A valuation this high means the stock is priced for absolute perfection. Any little misstep could send the price tumbling. For the bears, this is a classic bubble just waiting for a pin.
And this chart shows you what that looks like in the real world. You can see it right here. After hitting a recent high, the stock has already fallen over 38%. That's not just a small dip, folks. It's a major correction that backs up every single one of those strong sell signals we just looked at.
So what you have are two powerful, completely opposing forces. On one side, you have this incredible business growth. On the other, a sky-high stock price that's looking technically weak. And this conflict has created a massive divide, splitting Wall Street right down the middle.
And just look at this. This slide captures that divide perfectly. On the bull side, you've got analysts from firms like Wedbush saying the stock is going to $200. Meanwhile, the bears at RBC Capital think it's going to $45. I mean, that gap is just enormous. It shows you that even the experts are living in two completely different realities when it comes to this stock.
And it's not just the Wall Street pros. The entire investor community is split. You've got people on social media claiming the price drop is manipulation, that it's a huge buying opportunity. And then you have just as many people saying, no, this is a much-needed, totally justified correction for a stock that got way ahead of itself.
So, what are we supposed to make of all this? How can a company be doing so well while its stock is doing so poorly? This is really the central challenge for the modern investor looking at Palantir. It's about navigating these conflicting signals to find your own clarity.
It really does feel like a story of two different Palantirs, doesn't it? You have the company, which is an undeniable success story of just explosive growth and real profits. And then you have the stock, which carries this extreme valuation risk and is showing some serious technical weakness.
So if you're watching this stock, here are the key things to keep your eye on. The bulls, they're laser focused on that U.S. commercial revenue growth. They need to see that rocket ship continue. The bears are watching that PE ratio, waiting for it to come back down to earth. And technically, everyone's watching that 128 support level. Can the stock hold the line? Of course, big contract news or analyst upgrades could swing things in a hurry too.
And so it all comes down to this one single question. Is Palantir's incredible vision for the future strong enough to be worth its very high price today? There's no easy answer here. It's the classic courage over fear dilemma. It requires you to weigh those powerful fundamentals against some very real valuation concerns. And that's the core question for anyone looking at Palantir right now.